Hello, everybody. Here we go again with the Bitcoin Relay Bitcoin Session. We have a very special guest today. I'm really excited to have him here directly out of Australia, the great Aus Red Land. Thank you very much for being here, Friar Has.
Thanks for having us, Julian. Great to be here.
Amazing. Maybe you can kick it off with by telling a little bit about yourself. I think a lot of people in the Bitcoin community obviously probably know you from Twitter. You've done an amazing work for a very relevant topic for us, which is Bitcoin dollar cost averaging, which we'll obviously get into detail. But maybe tell us a little bit also for maybe some newcomers that don't know the like Bitcoin personalities yet. Maybe talk us through what you do.
So my name's Hass. They call me the Friar because of my religious conviction to Bitcoin and irrational. Well, some people call it irrational. I call it highly rational. Bitcoin maximalism, fundamentalism, and extremism. Interested in many a Bitcoin topic, especially things like mining. But even more so these days, the dollar cost averaging uh, army and the formation of that army and what it promises for the future of the industry and dare I say even the future of the world.
Sure, cool. Dollar cost army, I love it. So let's get started with the questions from our community. We got quite some interesting questions from our community this time. So let's kick it off. First, what
Yeah.
is dollar cost averaging, and why does it make sense in your opinion?
So dollar cost averaging is a quite a common and popular investment strategy used in traditional markets, and it's a very good uh, way to remove volatility from an investment. So I'm being very careful with my words here. DCA, is neither really good nor bad. DCA can bite you in the rear, uh, or DCA can absolutely save you. But what it does ensure for you is elimination of all buyer psychology. When you're committed to just buying at a fixed interval, whether that's daily or weekly, or in the case of MicroStrategy, every 3 seconds on a automatic bot. What you're doing every time you break up your buys into smaller and smaller pieces is just smoothing out the volatility curve. So as the old saying goes, we know a lot because we've seen a lot. And what we've seen over the past 7 years is that the Bitcoin price uh, always returns to its natural mean, uh, and that's some people speculate that natural mean is the 200-day moving average. Some suggest it's the 2-year moving average, but regardless, Bitcoin is always extremely reliable at returning to the average. So because Bitcoin is something that is very return to the mean and average in nature, taking an averaging approach to getting your exposure into Bitcoin might be quite beneficial to you. Now, with that said, everyone gets into Bitcoin in different ways for different reasons, and maintains their investment for different reasons. So some people might go all in upfront. Some people might put in half their money and DCA the rest. It's all up to effectively individual risk tolerance and your ability to hold through panic. And that's really where DCA comes and helps you. It increases your Bitcoin Zen. You can stack on autopilot without having to think about the price, just shifting your dirty fiat into Sats.
Yeah, it's really, you touch on so many good points. It really gives you peace of mind, right? Because it doesn't really matter how high the volatility is. It's all good as long as you DCA, as long as you follow this strategy?
Well, I can tell you just from my personal experience, I've been, a Bitcoin zealot, for a very, very long time, and I can't bring myself to buy Bitcoin when it's crashing. I'll say, "Ooh, maybe I'll buy, maybe I'll buy tomorrow. Maybe it'll be a bit lower tomorrow." But now
Well,
that
that's
like,
exact.
but now that I've been given an option to like automate like my buying decision making, like I have no decision to make really
Yeah,
anymore.
yeah.
I know every night when I go to sleep that today I stacked this many dollars worth of sats.
And you made good trades.
Yeah.
you know that every day or every week or every month, however you stack, you have a good trade because you have in the long run you have the best average price because you always buy less when the price is high and you always buy more when the price is cheap, and this is automatic. And I think it's very rational because, as you say, we are all humans and we're all emotional and we get trapped in these I need to buy now because there's a dip. Oh, 10% lower price. I need to buy. Bitcoin is on sale, and then the other day, if it goes up, oh, I need to take some profits now. But like
Well, not
you,
just that, there's also like it cuts in every direction. Oh shit, it's up 10%. Like I better buy some before it's up 20%.
yep,
And
FOMO.
the
Yeah,
classic the classic FOMO, it's uh,
yeah.
yeah, like that, uh, you know, uh, 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 these emotions take years and years and years to like train out of oneself. If you're a trader
Mm-hmm,
for a profession, you've probably been desensitized to such emotions.
mm-hmm,
But for just regular people, like myself, uh, many people would say, "Oh, you know so much more about Bitcoin than other people." Blah 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 blah. Like, doesn't matter. Like, I still have the same psychology, and like I
mm-hmm,
can't handle, FOMO, at all. So,
mm-hmm.
so for me, the automatic option is like the only option.
Yeah, it takes a lot of commitment if you don't do it automatically. So that's why I think the DCA is a great strategy, but what really works is auto DCA, because if you do it like manually every day, or every week, I mean, we're all, as said, we're all humans, we're not machines. So you probably will have sometimes you will have different you will do it at a different time. Sometimes you will forget, maybe sometimes you have some other other things to do. Sometimes then you get enticed to spend a little bit more or a little bit less, and so if you don't do it, if you just hop on an auto DCA tool like Relay obviously is, but there are many others. If you just do this, then you're fine, and
Yep.
it really gives you the the peace of mind and the satisfaction of I know I do good trades every day or every week.
Well, look, here's like an exercise I like doing, like with a lot of people. So there's a famous website, dcabtc.com. There are several more like it that allow you to calculate a hypothetical DCA over a particular period. And like if I had auto DCA from like day one and just stuck to like my modest daily budget, like I'd have like 4 times more Bitcoin than I have now.
Wow, really? When did you start?
I started in the 2013 bubble, so my
Okay,
first buys were at $1,000,
which
uh,
was huge then because it went
uh,
down so
which
much.
was it went down to 150. I didn't
Wow.
buy any at 150
Mm-hmm.
because you can't, because you buy at
Four times
800,
more
then you
in
buy at
7 years.
600, then you
Mm-hmm.
buy at 400, and then it gets to 200, and you say, like, no, no more. Like, I can't do any more. Whereas if you have an
Uh-huh.
auto DCA, like there is no, you probably wouldn't have even found out that it hit 400.
Yeah. Yeah, you always
Like
you also
you're on
stop watching the
autopilot.
prices,
Every
right? Yeah.
every few months you go in to do a withdrawal. If your service offers an automatic withdrawal, even better.
Mm-hmm.
But I know that's not always feasible for a lot of service providers. So I'm happy enough to just get the automatic
Mm-hmm.
buying functionality. But like just psychologically, in the best months and years of like Bitcoin price in like late 2015, uh, I couldn't like psychologically defeat myself to
Mm-hmm.
just buy a bit more.
Mm-hmm. Wow. So you would have made 4 times more in Bitcoin in 7 years if you did it.
Yeah.
I think that's amazing.
Yeah,
And then so
because there
you
was a
wouldn't have to work anymore.
because there was a good period in like 2015, and it wasn't short. Like Bitcoin was like below $300, for quite a while.
Mm-hmm.
For a year or so.
You could
Keep
just pick up every week there, and yeah.
just pick up little bits every week. Like
Yeah.
back
Wow.
then you could have picked up one a week.
Mm-hmm. Yes.
So but
We will
but
never see that again.
but psychologically, after buying at 1,000 and 800, and then in hindsight, like $1,000
Mm-hmm.
is a bargain. eight hundred
Yeah.
dollars is a bargain. But realistically, if you bought at 1,000 and instead you waited and bought at 200, you'd have 5x the Bitcoin.
Mm-hmm.
So
Amazing.
it does make quite a bit of a difference. But had I just split up my buys, auto DCA, $10 a day or $20 a day,
Mm-hmm.
whatever it was. Granted, it's been a very long time now. It's been almost 7 years. Uh,
Mm-hmm.
but I've told other people to do the exercise, like assume their DCA, and they were doing auto DCA from like the time they first discovered Bitcoin. And a lot of people tell me they're between 10 to 15 times worse off.
Damn.
Like if they just done auto DCA instead,
Mm-hmm.
uh, they would have made like an absolute killing. So like over the past 2 years, if you've been doing DCA, you're up like 60%.
Mm-hmm.
Whereas I think the price is like barely up 10% over 2 years
Mm-hmm.
or something,
Mm-hmm. So
over a
interesting.
2 year period. Because we got a lot of time to accumulate auto DCA in the 6,000s, in the 4,000s.
Mm-hmm.
But psychologically, when you're in those holes, it's hard to front up to the exchange every day or every week at
Mm-hmm.
4,000 and say, all right, I'm gonna buy some.
Mm-hmm. Absolutely.
The really strong opportunistic ones will, but like the regular people like myself, we can't handle the market psychology.
Of course. So interesting. And so there are other strategies. Obviously, we touched on a little bit before, and then there was one question from Twitter saying like, okay, what's the difference between DCA, so dollar cost averaging, buying a fixed amount on of fiat every week, and value averaging. Could you maybe a little bit explain a little bit? I don't think we both are the experts in that, but could you explain how you see this, like the maybe pros and cons and the differences, and
Yeah.
then maybe also what the difference is. Then the third thing, which is just trying to time the market and trying to buy the dip.
So the way I've kind of sort of understood it was with DCA or FCA or fiat cost averaging. Doesn't have to be dollars. It can be francs or euros or pounds or whatever you like. Whereas with so let's just say so DCA is I want to buy $100 of Bitcoin a week. I believe value value averaging would be I want to buy 100 sats per week, or sorry, 100,000 sats per week, or a million sats per week, and aim it that way. So I'll be honest, I haven't run too many numbers on a value averaging point of view. But look, value averaging for me, thinking about it now, uh, can be uh, uh, one of those things that can like induce FOMO. So let's say my value averaging strategy is I want to stack a million sats per week. So that's roughly $100 a week at the moment. Let's say the price of Bitcoin for some reason just shot up back to all-time high next week, and it's at 20,000. I still need to stack 1,000,000 Satoshis, so I've got to find an extra $100. So for people that have sort of flexible and loose budgets, value cost averaging, can work out for you as well, but you can't predict how much money you're going to need every week. Whereas with DCA, if you're on a salary, let's say, I don't know what it is, you make $50,000 a year. You say, I'm going to take 10% of my yearly earnings, 5,000 a year, and put it into Bitcoin, which is, $100 a week. And
It's way
that's it.
more predictable, right? Yeah.
That's it. You're up for $100 every week. It's in your budget. You don't know how many sats you're going to get, unfortunately, because that's up to the price. But that's the two main differences. I'd be tempted to say that in that case, if the Bitcoin price is rising and rising quite quickly, value averaging might not be the best. When it's falling dramatically, you might be selling yourself short by only aiming for 1,000,000 sats a week. So let's say the price were to plummet 50%. So I'd still, get my 1,000,000 sats per week saved up, but I would have only shelled out $50. So I've saved myself, $50. Why don't you just buy 2,000,000 sats? You're going to use $100 anyway. So look, I think it's horses for courses. I think I haven't seen value averaging strategy in the wild for Bitcoin. But look, yeah, that might be something interesting for me to go back and study. Maybe I'll go look back at a year in time, and I'll compare a daily value average. Sorry, I'll apologies, mixed up my words. I'll go back maybe a year, and I'll compare a value averaging strategy to a DCA strategy, and I'll see.
Yes, that would
I'll see
actually be
what
interesting.
pops
I'm
up
sure.
actually.
Yeah, I mean, I'm sure there's book written about it and stats and stuff. So yeah, I also want to go deeper on that. It's actually a very good question. I didn't really know the value averaging, strategy. I knew that that it's like the antithesis to, or like the different alternative to DCA. But
It's I think
I'm
I
just a
think
big fan of DCA.
it's denominating your it's probably more denominating your portfolio in Bitcoin than in dollars. So thinking in
Mm-hmm.
sat and sat
Yep.
accumulation. Uh, you don't know. I can definitely see the merits, but I've seen so much data and stats and numbers on DCA. I know that works, but I think I'll have to run the numbers on value averaging and let you know what I come up with
For
very soon.
sure.
Hopefully, maybe in time for the release of this, but
That would be
hopefully very
amazing.
soon because I'm interested to see how the numbers stack up as well.
I'm
I
looking
don't think
so forward to this.
I don't think there are any like calculators for it or anything. Heaps of those calculators like BC like I think it's dcabtc.com,
Mm-hmm.
uh, and several more like it. So I'll have a there's my commitment to you and the listeners. I'll have a look at value averaging for you guys sometime in the
Amazing.
next couple of days.
Looking forward to that. Looking forward to that tweet. Make sure to mention us.
Yeah,
Um,
definitely.
so there, there's also something called dollar cost selling. Like dollar cost averaging
Yes.
is obviously buying for $100 a week, for example, or just a fixed amount, and then I would guess that dollar cost selling, which I don't do, or I didn't really came across it but yet, but like I would assume that dollar cost selling would then be just to take a fixed amount of fiat and sell it every week. So for example, I
Yep.
sell Bitcoin for $100 a week. What do you think about that?
So for me, like my end game, like is that dollar cost selling. So 10, 15, 20 years time, I've done what I've needed to do with my career and all that kind of stuff. Bitcoin is the new standard, all of that kind of stuff. All of my wealth is in Bitcoin. If I can't directly spend that Bitcoin at that point. I'd be looking for like a budgeted every month, sell me $1,000 worth of Bitcoin because this is my bills at home, and whatever it is. So like, don't sell anything more than you need, and when you sell it, over an average period of time, you will typically get a good average price. So
It's
the
basically
exact
your
inverse of
pension.
buying, but just with the selling, and it's effectively your pension. Like, let's say you have, I don't know, at that point, you've got one whole, you're a whole coiner, and it's worth $1 million. Like, there's, what are you going to do, to, selling it for $1 million in cash? Like, what's that really going to do for your life? It might do, something for your life, uh, but for most people, they'll just be needing, like a modest, small amount, cash flowing in week by week.
I love
Because
that.
again, trying to time the sell, like, is just as hard. Like, you should have seen how excited I was the first time Bitcoin hit $5,000. So I'd been in a loss at that point for like almost 4 years, until it bounced back from 1,000, back to 1,000. And then when it got to 5,000, I said, like, oh my God, like, Bitcoin is at the moon. And like, luckily I didn't sell, because if I sold, you would have seen it go to 10,000. And like, you should have seen how excited I got at 10. I couldn't believe it when we got to 10,000. And similarly, couldn't believe it when we got to 2,000, 20,000. And then what? 3 weeks later, we were back down to 4,000. Blink and you miss it. So like, if you think you can, uh, you know, uh, plan a perfect exit from Bitcoin, like, it's near impossible. Like, nobody sells the top.
Yeah, just
Nobody
take the
sells the top.
emotions out of it
It's
again. Yeah,
so for me, what I'm doing now, because like, I've been holding so long, and it's probably better for my mental health that I finally sell something token a little bit, just to improve the quality of my life a little. I've already set aside the percentage of my portfolio I'm going to sell. I even have the orders worked out at particular price targets. If the price targets hit in this bull market, good. If they don't, wait till next bull market. And that's it.
I
So I've
see.
got my targets, I've got my orders, and that's it. I'm sticking to them religiously. So like, uh, let's say the price gets to 100,000, uh, uh, and I originally wanted to sell some at 100,000. I'm not going to say, "Ooh, no, 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 it might go
Yeah.
to 200,000. I think I'll wait to 200,000." And then, if it should miraculously go to 200,000, like, the green mist will descend, and you say, "You know what? No, no, no. I'll wait till 300,000."
Mm.
And then one day you wake up, it's back down to 100,000, and you say, "Shit, I should have sold at 200,000."
And you're in the trap, in the trading trap again.
And like,
Yeah.
so the so it's important for normal people, I feel, to avoid the trading trap. If you're a trader, you do you. You've been trained. You know how to manage your risk. Uh, do what you need to do as a trader. But normal folk such as myself, we got to resist the casino, like, as much as possible, because the numbers don't lie. The numbers have been run. The boring, slow and steady stack sats every day auto DCA method, like, at this point, it is tried and true. Uh, you might not make a 10x gain, but like, you will never lose. Like,
Mm,
never,
for sure.
like, never, ever, ever. So like, even the people that started buying at the top at 20,000, if you started your DCA then, like you're up 75% at this point,
Mm-hmm.
because it was
And
only
why?
20,000 for a day. You
Mm-hmm.
know, like you didn't have time to stack at 20,000. Like the
Mm-hmm.
price went up straight away and came back down straight away.
Mm-hmm.
So like it's extremely difficult to lose on the long term with DCA, but and you know, and it's an unfortunate but you might only make 20x instead of 100.
Yep. You have less
Because
risk, but then
you
obviously
know
you also have less return
this,
potential.
yeah.
Mm-hmm.
So you do reduce your risk dramatically, but at the same time, you probably like cap your. But like I'm talking stupid here when I'm saying you're probably capping your gains at 20x, or like that's still you know unbelievable
Yeah.
for something that's effectively proven to be like effectively zero risk.
Yeah.
Like no one has ever lost money like DCAing for a year.
Yeah, that's actually
Because
DJing into
because they
Bitcoin.
because
Yeah.
because they get the advantage of you know of the
Mm-hmm.
big crashes.
Mm-hmm.
So like the people that accumulated, we were down in the 3,000 range after 20,000 for like 3 months. Like if you had a good little religious, meticulous DCA program going on, every single thing you stacked in those few months has more than tripled.
That's amazing. And like, why is, in your opinion, Bitcoin like the asset to do DCA out of like all the traditional assets that you have, like stocks, bond, real estate, whatever you can buy, gold, or also the new kind of all these cryptocurrencies. One question was, why don't you use Nano, for example? I think
Yeah.
Nano is another cryptocurrency. Like, just what do you why do you think Bitcoin is the best dollar cost averaging asset from traditional in compared to traditional assets, but also compared to other crypto assets like Nano or Ethereum or whatever?
So look, DCA is a good strategy to take everywhere. In the traditional markets, it's a little more difficult. So for me, at one point, so I use an exchange in Australia called Bitaroo for my auto DCA. And at one point, I had like 10 out 10 different so I was buying Bitcoin effectively every 2 hours. So not quite hourly, second hourly, and I was buying like, $5 every 2 hours. And I'm like, even it out, $50 a day, whatever it is. The transaction costs for those were basically nothing. I paid like, 0.19% fee and I had my transaction. If I was trying to stack stocks every 2 hours, like the transaction fees will eventually bankrupt me if I'm. So, for example, for a stock in Australia, my broker charges like a flat fee of like $16 per trade,
Yep.
per brokerage share. If I'm trying to do 20 trades a day, it's $360 a day. It's a disaster for me.
And usually you have to buy a whole stock.
And you have to buy a whole stock. So it's the same things. But with that said, so for example, in Australia, we have our pension funds. Our employer contributes 9% of our salary to our pension fund. So effectively, every paycheck I'm getting, my employer is doing DCA on my behalf into some stocks or whatever it is. So DCA is a model that works well everywhere, but especially well in Bitcoin because of the low transaction costs, the low per transaction fees, depending on how you have your setup. But it's possible to get really low transaction fees and really low order amounts. So you can't stack. If I was just a regular person, I wanted to save a bit of money in a stock portfolio. I can probably afford, a budget of, maybe 10, $20 a day, investment budget, 100 a week or 5,000 a year or whatever that happens to be. If it's not Bitcoin, I'll be losing half my money in like transaction fees. And I think because of the purpose and strength of DCA in reducing volatility, I don't think traditional assets are volatile enough to warrant a DCA. But I swear by the strategy in pretty much any application, but especially Bitcoin, because of like the violent swings and long periods of stability, usually at really ugly, dirty, stinky prices. So you'll see Bitcoin will have just a monumental crash and then just stay in the gutter for like 4 or 5 months, and then 1 week it'll triple, and then your opportunity is gone forever. You have to wait for the next one. If you didn't buy anything during those really ugly times where it's difficult to buy, that's I suppose why you missed out. That's for the weak. That's days for the strong-handed.
And what about other cryptocurrencies? Like, because you could say transaction fees are maybe even lower at other cryptocurrencies and whatever, or at
Look,
least
for
the same.
me, I dollar cost average into Bitcoin because I'm confident of like a long, slow grind into the future. So as a savings vessel. With the shit coins, like I'd be treating them as such. Uh, so I just lump sum buy and like pray it'll 3x so I can like dump it. Whereas with Bitcoin, I'm doing the DCA so I can build it into a DCS when I'm 50. Whereas, and I'll almost be able to guarantee you Bitcoin will be here when I'm 50 years old. The other ones, I don't know.
For sure. I like how you call it a savings technology. I think out of these five 5,000 plus cryptocurrencies, I think Bitcoin is the only currency that, or the only asset that actually claims to be a savings technology and also acts like it. Like it has the same parameters as gold, for example, or even
Yep.
better in a
So
lot of them.
it happens to also be a speculative asset at this current moment in time. I agree. But the other coins are just straight speculative assets. So like you shouldn't really, if you really want to dip your toes in shit coins and like buy some Ethereum, like probably just tear the band-aid off and just buy Ethereum. Like don't try to treat something like Ethereum as like a savings vehicle where you dollar cost average into
Yeah,
Ethereum.
because
Uh,
it isn't. It also doesn't try to be. I think Ethereum and all these others, they have other purposes. Um, that you can, you do whatever with it. If they have other purposes, but like they don't claim to be a savings technology. They are not good in being a savings technology and a value appreciating asset. So why would you DCA in those?
so look, one good reason, I suppose. So I'm going to get backlash from the flock here because I'm not pumping Ethereum here. But Ethereum, in terms of like as a DCA performance, uh, uh, as of like the past few weeks, has outperformed Bitcoin
Mm.
on a DCA basis. Now the reason for that is Ethereum price fell more savagely, more quickly, and fell deeper. So that even now that it's recovered slightly, if you've been stacking Ethereum for like the past 2 years in the gutter, it's just tripled for you.
Mm-hmm. Mm-hmm.
So on average, you've done really well. But 3, 4 months ago, if you'd been DCAing Ethereum for like 2 years, like you were effectively ruined. And if you'd been DCAing Bitcoin for 2 years, you were up like 40%. Even though Bitcoin was down like 60% from all-time high and Ethereum was down like 80% from all-time high. And I think Ethereum is still down quite dramatically from all-time high. I think it might be, down 70%. Like that's the fun thing. Uh, you know, if a shitcoin is down 90% and it doubles, uh, then it's only down 85%.
Still down. Still down there.
So it feels, I know there are a lot of people saying, oh, but Ethereum this, Ethereum that. It feels like it's doing well at the moment. It's just because it was doing really, really, really bad like before. And like, nobody in their right mind would have thought, hey, doing DCA on Ethereum right now might be a good idea. I think
Because it's not
it's
even.
an idea that's almost exclusively reserved for Bitcoin.
Because it's not even scarce. Like scarcity is probably one of the biggest reasons why you would want to buy something like gold or something like Bitcoin to DCA in something that's scarce. If you think that the supply is, or if you know that the supply is scarce and the demand will be higher, then obviously price will be higher, right? So that's why you DCA into it now. Whereas at Ethereum or many others, it's just not even, this is not there, this prerequisite that it's scarce, the scarcity is not even there. So
And
yeah, I
it's
totally
difficult
agree.
as well. So if I wanted to DCA into physical gold, like it's almost impossible for me, or I'm at a huge disadvantage. So for example, if I want to go buy you know, a 1 gram, you know, quarter sovereign coin or whatever it is, like the my actual price on it should be like, whatever it is, 50 US or whatever it is. But because it's a small coin, they charge you mintage of, $4. And, they charge you, sales tax, and they charge you a spread. So by the time you're trying to DCA, your $100 a week of physical gold, you're losing 10% every transaction.
Absolutely. And so if we are talking about fees and stuff, one question was as well was, where do you see the on-chain fees in 2030, like in 10 years from now? Because that's one problem also we are facing. Like people have every time they stack, it's basically an on-chain transaction, and as we know, there's only so many on-chain transactions you can do. And I mean the base layer, the chain is very, it's scarce. There's not,
Yep.
you cannot do billions of transactions. So what do you see, how do you see this playing out? Like if the fees are getting higher and higher, will it still be possible to stack like $10 a day or $50 a week? Will Lightning might
I
be
yes, I do think that'll be possible. But I do think by 2030, now look, that's a long time. It's 10 years. It's there's another two halvings between now and then. So
true.
but, quite a long time. I don't think there'll be anything dramatic like a block size change. I think the blocks will stay as is, and I think by 2030, uh, the blockchain will be full, like 24/7. You like Yeah, you're probably looking at 5 to 10 sats per byte if you want to get something through on chain, and like you'll be waiting a week with that. But with that said, 10 years, long time. I think anyone that starts out in Bitcoin in 2030 will not be touching the base chain. They'll be using Bitcoin, but not layer one. Maybe not even layer two. They might be getting onboarded onto layer three, for example. So I really do think, look, it's not a bad thing to not be able to get space on layer one, because layer one really should be reserved for the very, very important things. So if I wanted to send you 100 million bucks, even at 100 sats per byte, like it's not a $40,000 transaction, it's a $40 transaction. That's fine. $1 million, $40 fee, big whoop. But if I
Well,
was trying to send you 100 bucks, yeah, $40 fee, it probably doesn't make the most sense. But I do see huge developments on future scaling layers, because as far as I can tell, I'd say there will probably be almost no more new innovation on the base chain in 4 or 5 years' time. I'd say probably, would have layer one protocol, ossified by then, and then you know everything on top of that is layer two. Because
Interesting.
Bitcoin already is almost there. Like uh, like I'm trying to think of Bitcoin 5 years ago. Like Bitcoin was like I'd been in it for a few years already. I'd held some Bitcoin, but really, were you around in 2015?
That's when I started. Yeah.
It was still come on. It was Bitcoin was a joke
Yeah.
to a lot of people back then. Bitcoin was a joke. The UI was terrible. The wallets were like it wasn't the best.
In Switzerland,
And have a look at
we had a,
how much has
yeah,
changed in 5 years.
yeah, yeah, for sure. A
So
lot has changed.
whatever we saw in the past 5 years, because of the way this thing
Mm,
is exponential, we're going
mm,
to see the same level of change over like the next 2 years, 3 years. Like 10 years is a long time.
yeah, yeah,
So hard to make predictions, but I'd say uh, like by 2030, like it's either Bitcoin is zero or it's $1 million. So it's either the blocks are full, and the miners are happy with the small reward and the price is high and everyone's using layer two, or people have moved on to like using Libra or whatever central bank digital shitcoin
yeah, yeah.
they release, because those are probably coming within the next 5 years. I'd say there'll be at least one major central bank digital currency in the wild circulating, and it'll probably either be the euro or the yuan. I don't know if the Americans will be quick on the uptake of CBDC, because I think their machine is just too big to be agile and like innovate with these kinds of things. I have a feeling it'll take the Americans a long time to get right.
Absolutely. I love the prediction. 2030, either zero or a million. I think it's very realistic. It
Because it
sounds
doesn't make sense
crazy,
for
but it
Bitcoin
is.
to be $14,000.
No.
Like now,
Yeah,
yeah, all right, it's finding its feet, but if in 10 years' time, like it hasn't properly found its feet, so in 10 years' time, we've only going to be having, like, under 200 Bitcoin mined a day. So we got 625 now, that'll drop to 300, then 150. So in 2030, it'll be, 150 Bitcoin a day, or 75 maybe a day. I'll have to do the numbers. In 2032, it'll be 75. So let's say the price is $1 million. That's a daily fresh supply of only 75 million, which is a weekly supply of half a billion. So $25 billion a year in the year 2030 will keep a stable Bitcoin of $1 million. It's not a lot. 25 billion is not a lot. There are like
no,
70 billionaires that have more
yeah,
than 25 billion. So just just because of the nature of it, like scarcity, people using it. So so right now in this era, 10 million people, which is 0.2% of the world's adults, stacking $10 a day will give you $100,000 Bitcoin, because there's just a relentless stream of cash, 100 million a day coming in. Aside, from corporates and all of that kind of stuff that are going in, if you just have a loyal, dedicated DCA army, with just a little a day, just holds the price floor. Circular economies form. When there is a stable floor, it encourages more people to buy. The number goes up. Uh, so it's all a good it's all a confluence of things. But I'm confident by 2030, 2030 because it's a round number. Let's call it exactly, to be precise, 2033, which is 1 year after the 2032 halving.
mm.
It'll be $1 million or it'll be worth nothing.
Sounds like a safe bet. And if you're listening, if I'm listening to you, I think like really nothing can happen that destroys this thing. But it was also one question, and I think it's a good question. What attacks on Bitcoin could the future hold of us? What could break Bitcoin at this stage?
Uh, I'd say it'd have to be like internal strife. Like it'll have to be a social attack that breaks it. Another fork, something like this. Uh, in terms of like outside like external risks of like government banning Bitcoin and all that, like not going to happen. Uh, again, as Saifuddin would say, like Bitcoin can be killed, the government can kill it, and like the government can just kill it by like becoming like ethical, responsible government that uses like a gold standard. So like the chances of that happening are zero. So,
But it would actually, yeah. I mean,
but
Bitcoin
that's the
challenges them to
yeah,
do it, and they can take the challenge, and maybe they do it, and maybe if they get anything right, then Bitcoin will maybe not go to zero, but it would be kind of, it would stay irrelevant. If
yeah.
they
Because
don't,
look,
then
it, if I had verifiable, trustless guarantees that like my money, my Australian dollars were scarce and would not be printed and all that kind of stuff, and like then like I wouldn't have a pain point like to use Bitcoin anymore.
exactly, the problem would be gone. And right
Yeah,
now, Bitcoin solves a lot of problems, right?
but
It
yeah,
was
but I
built
don't
for.
think that's actually even feasible for a government.
Hmm. Hmm.
Like I don't think a government would be able to make like an ethical replica. Like it's
Hmm.
just they don't have the infrastructure, and there's too much room for like human interference and error. Bitcoin's our one shot, and we've got to get it right and not succumb to these social attacks. Because if we fail, there'll never be another there will never be another attempt.
So we better get that right.
So we better get this right. So this is our one shot
It's our
of
chance.
making it right, of fixing
Uh,
up all the rotten incentives. Because if Bitcoin fails, I don't see any other cryptocurrency ever being able to bootstrap
mhm.
and succeed.
It's a big responsibility, but it's also a big opportunity for our generation. You know, our generation can really change something now.
Yeah, absolutely.
Cool. So let's get to the last question. It's always my favorite. I hope you are open enough to give us some hints about that.
All right. Yeah,
How
yeah,
much
yeah.
how much of your total funds do you hold in Bitcoin, like percentage wise?
I say a little over half.
All right. Cool. No, that's
So,
no,
uh,
that's
so
conviction.
uh, yeah, that's maximum level of like. So if you want to talk about like irresponsible long, like as defined by Raoul Pal, 100% of my funds are in Bitcoin.
Can you explain that?
So like Raoul Pal, when he said I'm irresponsibly long, like, and he was saying, what proportion, he didn't count like his house. Like he counted like his illiquid assets, like shares, gold, this, that. Uh,
His
uh,
investable assets, you mean?
yeah.
Kind of.
So for
Okay.
me, like for my, it's everything.
Okay, interesting.
Well, I've got that
Also,
and my roof over my head. That's it.
amazing. And you will
So
stay like this, or?
max conviction. Uh, I won't. I don't like violating the 80-20 rule. So if the portfolio were to move, were to go from 50-50 to 80-20, I'll try to keep 80-20.
Okay, interesting. But you would get up
Just
to 80%. Okay.
yeah, yeah. No, I'd be happy to like if it was up to me, I'd be at 80% now. Like I sell my house and I buy Bitcoin. But it's only a little bit up to me, so I'm
Yeah,
gotta keep the house
yeah,
and see what happens after that.
yeah. Amazing. Thank you very, very much, Sir Friar Haas, for being on. This was an amazing discussion. 9 hours or 8 hours between us, and quite
Yeah.
some 100 kilometers, 1,000 kilometers.
Oh, it'll be close to 20,000.
That's it.
So,
Cool.
oh no, about 15,000. 20,000 to England, about 15,000 to you guys,
That's it. Hey,
or
thank you very, very
17,000.
much.
No worries. It was an
You're
absolute
a
pleasure.
numbers guy.
Yeah,
It
yeah.
was
But
a
you got to run
pleasure.
the numbers. You got to run the
Uh-huh.
numbers. That's
Uh-huh.
how it is.
Numbers don't lie.
Yeah, indeed.
Cool. Hey, let us know about your value averaging
I will do.
adventure, and yeah, looking forward to talk to you soon. Bye. Have a
Yeah,
good one,
will
man.
do. You too. Take care,
Cheers.
Julian.
Take
Take care.
care. Bye bye.